Hey, everybody, welcome back to Momentum Monday. On this week's show, we'll discuss what's happening to inflation and dive into if it even matters. We'll get into Nvidia earnings, the crazy action in SMCI, the relationship between OpenAI and some companies like Adobe, and then dive into Coin/Robinhood earnings. We'll then hit you with a big picture look at markets, get into our community's top questions, and finally wrap up with stock picks for the week. I'm your host, Tommy Tranfo, joined by the market wizard himself, Ivan Hoff, and the chief twit, Howard Lindzen. So, Ivan, we're coming off a week with two huge misses on key inflation data points. Is it time to be concerned about potential rate hikes, or does this not really matter?
I think it's too early for that, and all the CPI and the PPI inflation that came a little bit above estimates, all they showed is that the Fed is right about waiting until May, maybe June, about a potential rate cut. I don't think any hikes are on the table right now. And obviously, this is why we saw a really tepid market reaction, just a tiny gap down and then a recovery. I mean, you don't see really that in QQQ and SPY, but for example, small caps are near a breakout point here. They fully recovered 2 days later. Mid caps broke out. So we might see some type of sector rotation in the next month or so, especially considering the weak seasonality.
From a risk on or risk off perspective, is this still a period of? I mean, it still seems like we're a little bit risk on with how crypto and these other kind of sectors have been moving, or is this a kind of a signal that hey, it may be time to take a step back?
Look, it depends on your time frame. If we're talking about the next couple weeks, just considering that the second half of February is seasonally weak, just considering that the week after monthly option expiration is typically weak, then we might see a slight pullback. If your goal is to capture the next 3 to 5% market pullback, you might be better off served to be short probably in the next couple of weeks. But longer term, we're still in a bull market.
Yeah, if you're in your 20s or 30s and listening, you can listen, and take what you want from our show, but it's always risk on. You're a time billionaire. You live in the United States, and until further notice, companies are wired to create profits for their stock price to go up, right? And technology is solving a lot of the problems that public companies have been using as crutches. For example, payment in stock at software companies. Eventually, AI will kind of alleviate a lot of those jobs, and you don't have to pay bots options. So I mean, the long-term bet on technology means people in their 20s and 30s should be risk on. Momentum Monday, Ivan and I do every week to kind of help people think through where trends are going with, where trends are really happening. And around the edges, occasionally, people may want to, as I say, tinker. Ivan's a swing trader and I'm more of a long-term trend follower. So I really am, as much as we like talking about momentum and trends and stocks here, most people should just stay risk on. There's, every decade there's a one or two times where it pays to be risk off. Very hard to predict that. But right now,
So one of the stocks. Yeah, go ahead.
Right now it's just talking about with a lot of smart friends the divergences out there, and that stocks should be, pulling back. And some are. Apple has kind of gone sideways for weeks and months, and that kind of is the market. So the market has been kind of pulling back, but underneath the surface, there's just been all kinds of strength.
Well, the one sector that hasn't been pulling back at all and is going to be, the spotlight of next week is Nvidia, which reports earnings, on Wednesday. So as far as these assets are concerned, I mean, is this still the parabolic run that is going to continue out the rest of the year, or did we see the action on Friday with SMCI and it's time to take a pause on this incredible semiconductor rally?
Well, people are going to YOLO options. Ivan will have his own thoughts. You're pretty removed historically from the 200-day moving average. So it's not like I'm rushing to put on a new position. In effect, it's kind of a wait and see. If you're long, you've done a good job, and you hope it continues to go up. If you're short, you know, I just, you're betting on the market, you know, being disappointed with that whatever big number they put on. But it feels like in their sights, you know, gone to third place in market cap. And strange things happens to companies when they're moving like this. So timing when it's going to end is not easy. So, Ivan, what do you see?
Yeah, I wouldn't equate Nvidia to SMCI. We're going to talk about SMCI in a bit.
The margins are completely different. SMCI
I mean,
is more of a lower margin.
I don't think Nvidia is even trading at that rich valuation. It's just P of 84. Look at those earnings and sales growth numbers. I mean, 200% sales growth last quarter, definite acceleration in margins, acceleration in earnings growth. I don't think Nvidia is parabolic. I think it's very likely to go higher. And a couple weeks ago, I posted a poll on Twitter asking, you know, which stock is going first to 1,000, SMCI on Nvidia. Both of them were around 600 at the time. People were laughing. But 2 weeks later, you know, SMCI hit 1,000. And I think Nvidia at some point will do as well. Obviously, no one knows the market reaction to their earnings on Wednesday. And that reaction, I think, will basically have a huge influence on the entire market, especially tech stocks. But I do know that quite a few people are hoping for a pullback to its 50-day moving average where they can enter again.
So the implied volatility of Nvidia heading into the report is like plus or minus 10%. If this stock gets cut in half by 50, though, would that be surprising to you after the report?
By 50%? What do you mean?
Not getting cut. It's not getting cut. There's no you know, barring a plant implosion and fraud, the stock is not getting cut 50.
Yeah, unless there's some accounting irregularities, stuff like this. I mean, this is the ultimate AI play that it's in the middle of everything, at the center of everything. And I think a lot of people are talking about Nvidia, but very few people actually own it. And I can see that the dips in it will continue to get bought. You know, I don't know when it will top. I mean, at least we need to see a lower high and lower lows, and we haven't seen that yet.
So what did you think then of? Sorry,
the difference between a Qualcomm and Cisco in the 90s and you know, the mortgage crisis in 08 and to this is Nvidia's customers are prepaying for product in cash. So it's not like their customers are going to go broke. Their customers are paying up to get the product today, much like Boeing. So it's kind of like it's more like Boeing than it is a tech stock in that people are paying for the product before they build it, and Nvidia can name their price, and they're not going to have the risk of customer not paying. So it's a much different story. And therefore, like I've been saying, I wouldn't be surprised to see the stock continue to just people are comparing it to Cisco and the past bubbles, but based on its customer base, it's much stronger, you know, financially. So anyways, I think what happens in and around the video will be more important.
I mean, just look at Cisco and Qualcomm that Howard mentioned from 2001. Just wait for them to make a lower high and then a lower low below their 50-day, and then short them. There's no reason to do that before that.
Yeah.
Well, then, so speaking of shorting stocks, like one of the most talked about things was obviously SMCI on Friday, you know, chopping off 20%, you know, after it, you know, peaked at, 1050 or 1070, whatever it got up to at the end there. Was that healthy action to you? Did you like to see that pullback? Did that make sense? Or did that
this is a
also come
typical
as a surprise?
parabolic move. I mean, typical parabolic move. Obviously, behind every parabolic move, there are good fundamentals at the beginning, and they do have accelerating earnings and sales as well. But obviously, they made a huge move, 300% move in just less than a couple months. And now I wouldn't be surprised if we see like a 50% pullback even to 500. But I don't think this move is over. We might see other opportunities on the long side. Obviously, probably it's not going to make new all-time highs anytime soon, but it will have some pretty significant bounces that will be very profitable for short-term swing traders, for intraday traders.
Yeah. I think now's the time the CEO spoke. You can go research stuff they spoke about. I think their margins are more comparable to a Hewlett Packard or a Dell, which are both doing well. But as anything with these stories, it got hyped. The same week on StockTwits, Tesla's bearish. The extreme bearishness and sentiment on Tesla at 180 and the extreme bullishness on SMCI. CNBC came out with an article right around $1,000 on SMCI, asking if this is the new Nvidia. I mean, those are the type of things you see when stocks turn. No, it's not the new Nvidia. It's a different business. And sure enough, the stock's fallen $200, right? And, sellers look for those kind of liquidity moments. So in parabolic moves like you've seen, the really good traders that were long this stock for 3-4 years are looking for the right liquidity to sell as much stock as they can. And they got that over the last couple of weeks. Those people aren't looking to buy it back 10 or 20% low. So you've got to find a lot of new buyers of the stock. And so generally that means we touch trend lines generally once or twice a year when stocks get that elevated. Doesn't mean stock won't regain 1,000 and keep going, but I'm saying mathematically speaking, because of the way trend lines work and buyers and sellers work and computers work, people are setting buys around trend lines. And so the question is, does it hit it quickly on the downside, or does it float around here with buyers and sellers? But you're going to have to replace a lot of those buyers that were looking to this last week's liquidity, and they rung the register. So those are the things you got to think about. They're very micro, but those are the things that are going on behind the scenes.
So the fundamental conversation, underlying all of this regarding the semiconductor move is, what is actually going to be the productization of AI, and how is it actually going to innovate from the consumer's point of view? And there was a big made to do of OpenAI releasing their video production feature where you could type in a prompt and it would output a really well done edited video. And we saw Adobe stock get cut like 10%. As a reaction to that, seemingly kind of one-off event. Is this something that's here to stay for stocks like Adobe as kind of AI competition picks up, or is this kind of just a blip of the first reaction of something new?
The market tends to overreact to such type of news releases, especially on a Friday of when we have weekly, monthly option expiration, and people can speculate with options that expire that same day. It's yet to realize if actually that new OpenAI product is an actual competitor to Adobe. But I think it's healthy for the market in general that we're seeing that it's not all positive for all companies, that some companies are actually going to lose market share, but it'll take time for the market to figure that out. And typically the current market is just shoot first, ask questions later. And this is what we saw in Adobe last Friday.
When it's really good, Ivan, when multiples are this high, you shoot first, ask questions later. Here's what I will tell you. This is typical of what's going on. It's very hard to create art. It's very hard to write a blog post. It's very hard to use these tools. So what happens is, I forget the name of the new product, Salu or Sally or Sora. So what happens is 4 people that are good at it post something to Twitter. It goes viral. The All In podcast or whoever says, see how easy it is to create content? So-and-so's dead. The world is going to look like this way. Guess what? 4 people can create good art. Like, just because you hand people Adobe or Sora or ChatGPT does not mean everybody's going to become an artist, right? The good news is there will be people that will be able to use these tools at scale, for sure. 10 times, 100 times more than before. But we're still talking about very small amounts of creative people that this will bring forward. It'll be in the tens and hundreds more than before, but those people will have a harder time getting discovered because there's that many more people on the internet, and these people that found magic in these tools probably have no social followings, right? Because no one's been looking for them. No different than Peter Attia, right? Longevity became a thing over 10 years, and Peter Attia has been around for 10 years. So there's not going to be this immediate disruption of Adobe. Second thing on Adobe versus OpenAI, when you create a Sora video, and I've played around with it, and you give it a prompt and you tell it to create that motion picture, you can't build on top of that. So the minute I want to change one little thing in that video or prompt, I'm going to get a completely new prompt, right? Versus Adobe, where people can create files and build layers upon layers. So they're not equal, right? They're different. But what's cool, you can't take away the fact that it's very cool that these models, which are kind of magical, built on, I don't even understand how they do this on the large language models, that allow you to type a prompt and build a movie. So in the end, this is good for OpenAI. And short term, this is why they sell Adobe. People are going to wake up next week and go, well, this doesn't work for what I still need Adobe for the next decade, because in the end, Sora will make Adobe better when it's working well. So I'm not saying go out and buy Adobe tomorrow, but my gut would be Adobe's not in as much trouble as Friday sellers would make it out to be. But pretty cool advancements in AI for the creatives. But it doesn't mean that everybody's now a creative, and that's kind of the overhead.
All right, Aaron. So you said everybody can't be a creative thanks to these tools, but can everybody become a trader and investor? Because that's what Robinhood and Coinbase earnings kind of make it seem like after they both hit kind of record profitability numbers coming out of this week, and both their stocks saw a huge bump as far as that activity is concerned. So what are your thoughts on Coin/Hood earnings?
Yeah, good segue. Very well done. It's very different. Adobe, yes, everybody can use Adobe. Will everybody use Sora? No. Everybody who has a little bit of money in their account can use Coinbase and Robinhood. And I think, I only own a little bit of Robinhood after all these years, but you can see that it's a pretty big breakout. My problem with Robinhood, why I sold post IPO, is they have not solved wallet share. Right. So my big problem as a user, an early customer, an investor was they haven't built products that allowed me to put more capital or increase my wallet share. Okay. But now, 3 years later,
just Howard, break that down. When you say wallet share, are you talking about like retirement account things? Like, what do you mean by wallet share?
I'm talking about if you have $10 million, like the dream is, hey, I want to have one app. Elon talks about it with the dream of Robinhood to me when it started was finally I can have one account that, that has a carousel. I can have my trust accounts. I can have my kids' accounts. I can have one view and a trusted view into my bank. Flash forward 10 years later, I have $30,000 in my Robinhood account. So to me, that's a failure at the level that I wanted to use Robinhood. I'm still using Morgan Stanley and RBC and Schwab because I need them to do wires. I need them to do other things, right? And in the meantime, during those 10 years, Robinhood tried to go into China. They tried to go into Australia. They were doing all the things that didn't help me, right? It helped potentially the market cap, but it didn't help me, the customer, right? I think Robinhood is over the hump. I think what the market is saying is that Robinhood is now over the hump, right? Meaning, right or wrong with this breakout and the way people is the competitors to Robinhood that were trying to do this over the last 10 years are falling by the wayside, right? And
would those be like E-Trade and the Fidelities of the world?
They still do that. So everybody got a break because Robinhood did not execute to its fullest capacity. Going forward, though, and Interactive Brokers, which I own, continues at all-time highs. Going forward, though, Robinhood's going to get smarter, right? Because they have capital. The stock's moving up. Maybe they can do some acquisitions now with their stronger stock. And the competitors that came alongside them are all falling by the wayside because it's very hard to stay in business when the cost of customer acquisition goes high. Coinbase, on the other hand, has just done a much better job over the last 3 years both sticking it up to the SEC, fighting a little stronger against culture and the DEI culture. And Brian at Coinbase has been just a stronger leader than, let's say, Vlad at Robinhood, and you can see that in the stock price. But both, I'm long both, and it looks like Robinhood is, kind of getting a pass now, and people are starting to look beyond all the failures from AMC and GameStop, and giving a little more optimistic view on Robinhood. But I don't think they're out of the woods yet. Ivan, anything you see?
I mean, the market has been really hot in the past year and a couple months, especially the past 3 months, and people are back to trading both stocks and crypto and options, and we see that in the earnings report of Coinbase and Robinhood, and they beat estimates and they're going higher. It's as simple as that.
Cool. All right, take us to a big picture look, Ivan. What do you see when you look at just the broader indices? I know we touched upon it a little bit, with the kind of macro conversation earlier, but just when you take a look at the SPY and QQQ, what stands out?
Yeah, I mean, as I said, there was a 1-day CPI sell-off last week, kind of quick ripple to the 20-day rising 20-day moving average, and then a quick bounce. But then we didn't make a new higher high, and now we're watching if we can make a lower low, right? If the indices lose their CPI lows, that would be really bearish, at least in the short-term perspective. So both SPY and QQQ potentially made a lower high, and we're watching for a lower low. On the bright side, as I said, mid caps broke out, and then they finished the week near their highs above that breakout level. Small caps also continue to make higher lows above their rising 50-day moving average, potentially setting up for a breakout near 205, 206. So there is a chance we might see a short-term rotation into like smaller cap, mid cap, while big cap, the max 7 are taking a break. There is a chance of that. And as I mentioned, we have a bearish seasonality the second half of February and after the week of monthly option expiration. So it wouldn't be too wildly aggressive on the long side the next week or two. But obviously we are in a market of stocks, and you need to take every setup on its own merits. That's it. That's the big picture right now. I think.
So you brought up mid caps and small caps. Do you see the breadth conversation here as being important? Like, do you need these sectors to start going up and improving alongside
if
the
small
bigger
caps and mid caps really follow through, market breadth will automatically solve itself, right? We saw that last year in May, April, May, when we had the same conversation. People were saying, "Oh, there are only a few stocks going up," and then the small caps were struggling. And then instead of the market falling down, we saw a recovery in small caps in June, and then market breadth recovered. So, I mean, those bearish momentum divergences, as we talked about last week, they can resolve in two ways. We can either have a correction, or we can see a sector rotation and just other small caps rallying.
So when looking through small caps through a lens of something like the Russell 2000, there's a lot made to do last week over the fact that SMCI comprised like 57% of the index after its move. So does that discount the point that we're trying to make as market breadth improves? Most of the
I think
index was
SMCI is just 1% of the market cap. So I don't think, I mean, obviously it has an impact on a day-to-day basis, but it's not as big as people think. Market cap is just 1%.
I'm going back to the indexes, guys. The technical people are saying there's a lot of divergences, and there are. But as Ivan said, other indexes, you got the fat pill, Eli Lilly. Not only is the stock continuing to do high, and they continue to sell Ozempic, you continue to see an all-time high, and people denying they take Ozempic. And so there's this unbelievable bid under this product, and the product is in short supply right now. I think there's shortages of Ozempic. So you have this perfect storm where the drug's being taken, people aren't admitting they're taking the drug, and much like Adderall, there is a shortage of the drug. This is a perfect storm for a lot of these healthcare and drug companies that are all being invited to. Now, eventually, supply. For getting patents and everything, eventually markets create enough supply for these problems, right? And America does have a fat problem. But you can see XLV. I think, Ivan, you're pulling it up.
Yeah, all-time highs, yeah.
All-time highs for XLV. Another one, the oil index, the CRAC index, CRAK, oil and services, CRAK.
Yeah,
Breaking the all-time high. So demand is high. I think the divergences seem to be fixing themselves, which is really going to drive the short sellers nuts. Yes, Apple's been weak. Google's kind of been weak. You're really seeing a lot of the jihadish strength in the semiconductors and the Eli Lillys, but that's still strength, right? It just happens to be strength that the traders of the last cycle aren't catching, right? The market is moving. And it's also a reason why I like indexing, right? I'm not going to be able to own Lilly and Nvidia and hold these things the way I used to be able to hold these things. So it allows me to capture a lot of these moves. It's not as sexy a way to invest. But overall, the indexes are acting really good because these divergences in tech and other sectors are being eaten up by healthcare and even biotech, XBI, right?
Yeah.
Risk remains on. Cryptos, Bitcoin's, over 50,000. So for all the people talking about, the bearish divergences, I'm still seeing a lot of breakouts. So this is just a healthy market, and there is an election, and generally everybody wants to keep the market up, but you got to be on your toes. Listen, I'd say be on your toes. It's been good. The market owes you nothing here. It's had a great run. And I think people are getting a little sloppy thinking that this great run could continue. So I feel like sentiment's a little bit greedy right here. So people should be a little more careful.
All right, Ivan, if you want to stop sharing, we'll jump into community questions. And but I think starting us off is going to be the classic kind of chart that you guys are all familiar with. And I'm curious from your perspective, is this stuff that you give any credence to? As far as do these charts, when you see these kind of things, like, is this funny to you? Do you think this is serious?
Yeah.
And where do you think we currently live?
Supply and demand, greed and fear. History has a can you hear me?
Yeah.
History has a way of repeating, and and a lot of parabolic charts look like this, and the post parabolic, because that's just behavior, fear and greed, supply, demand. And so, yes, law of large numbers, as companies move up the right side of that axis during a run up, the market does its way of fixing things on its own. It attracts competitors. People get overexcited owning one stock, and sure enough, something happens along the way, either pricing power or oversupply or competition, which leads to that right-hand side of the chart. So again, do I wheel this out all the time? No. I mean, after you've seen it once, you kind of realize this is how things play out.
If you had to pick, where do you think we currently are within this context of this chart?
Well, I mean, in semiconductors, we're heading up the right-hand side, and I think the one thing that is different about the semiconductor rise is that there's still a lot of smart people that believe semiconductors are cyclical, which they are, but they are now much less cyclical and much more ingrained in everyday life than they were in the past. And there's so much cash in the system that the customers are not as flighty as they were in the past. And companies like Apple and Facebook are committing 2 to 5 years out in their orders and not quarter to quarter. So I think what's catching a lot of people on this rise is they're overlaying this chart saying and trying to predict the right side, the crash, but they don't really understand the fundamentals of this rise up. And each rise up at the top has a different scale, and has different, lengths of time. In hindsight, it'll look the same, but you can't predict when that climb ends.
All right, shout out All In Capital for that question. Great guy. All right, let's jump into a few more before we wrap up here with just your stock pick for the week. So Ferrari Fund, longtime stock user, crushed it in our trading competition that we used to run. He is kind of have a long-winded question here, but the most part I was interested in is just a quick commentary on what do you see with the weed sector. I know that's a popular topic that's just been uninvestable for the last few years, but any enthusiasm or excitement coming off the cannabis industry for you guys in the last few months here?
For me, I don't smoke. It feels like amongst my 40-year-old friends, the psychedelic market is much more interesting. I have more friends in their 40s mixing psychedelics, mushrooms, than I do talking about weed. So, no, I don't. I have some exposure to weed in the weed fund. It's been perennially terrible for 3-4 years, down 70 to 80%. I think, like all things, once you take out all the supply, once people have given up on a sector, listen, weed's not going away. It's just they can't analyze it. So generally, if weed's not going to go away, then we're probably due for a good run once everybody's out of the industry. But it's people timing that have really struggled.
Yeah.
There's still a lot of supply of, you've got to solve the supply problem and you've got to solve the banking problem. And, people need to be able to bank in order for this to become more legitimized. And so it's still just a glitchy industry. Ivan?
Yeah.
I mean, I don't have any particular insights. I'm just looking at MSOS chart. It's above its rising 50 days. So as long as it holds above 8, I guess it's in an intermediate term uptrend. That's all I have to say. I mean, I have no idea what are the fundamentals behind it. I overheard that there's been oversupply in the past few years, and I'm just looking at price action, and there's been improvement year to date, but nothing really to rave about.
Yeah, Todd Harrison, who runs a fund that I'm in, again, if you want to really dig into the news and fundamentals, he's got a great blog on he's an advisor to MSOS and probably has the most to say on the subject. And I've been following it both up and then down the last 3-4 years. So he has a lot at stake there and follows it very closely.
Cool. So we'll wrap up this with this question, and it seems like we're at that time of the cycle where people are looking for the Amazons of Africa's again. Jumia is this has been around for the last however many years, and if you just look at the price action over the last 6 months, the stock is starting to build up a huge following again back on our streams, and the community is interested. Hey, what the heck do you think of this company as far as the Amazon of Africa is concerned, and just a broader context of what do you think of kind of the international market, taking kind of the stalwart American companies, like the Teslas of the world, like you see this in China with NIO trying to be the Tesla of China. What do you think of these narratives as far as stock is concerned, and do you see anything particular when it comes to?
As a VC, if you can hear me,
Yeah.
As I said it with Robinhood earlier, there used to be this rule that you don't enter, no matter how well you're doing, don't enter China or a foreign country until year 10. Okay. And then during ZERP in the Uber era, it was like, let's go into China year 3. And now that was ZERP, and there was mobile software, and money was cheap, as you said, and talent was high, and it was kind of everybody was going to win. Like if you had an edge, your venture capitalist said win at all costs. Right? So we went through this era of 2010 to 2020, where everybody wanted to be the Shopify of this or the eBay of that or the Airbnb of this. So Jumia and a lot of fintechs and a lot of VCs got caught up in, well, let's go build a firm of China or the firm of Africa. I think if you follow people like QED, which is a great venture capitalist, fintech venture capitalist, they will even tell you, I talk to FinTech Frank all the time. They will even tell you how difficult it is for getting to build a company in the United States to go invest in a foreign country where the exchange rate, no matter how well you get it right, the exchange rate may screw you so badly that no matter how well your company does, you're going to end up with a loser. So you've got foreign governments, you've got exchange rate, you've got lack of information. I don't get it. I'm saying in a world where you have Coinbase and Robinhood and FinChat and StockTwits and CoiFin and low expenses indexes, I always get a little nervous when that's what people are thinking about, because that's shortcuts, right? If you can't find great ideas in your own backyard using the tools that you have in the United States, I generally shy away from those people and ideas. And again, if you're on a great run and you're on a heater and the market's great and you have great risk reward, if you're very good at discipline like Ivan is around your trading strategy, why not? But there's just too many thousands of ways to do this using U.S. stocks with fundamentals that you can trust, that I get wary of all these things. Now, that's the old man in me talking. It's not like I haven't broken my rules in the past, but we're in a bull market, and if Jumia is your best idea, I would say you're not somebody that I think is a good investor.
Fair enough. Any thoughts, Ivan?
I mean, I was looking at the Jumia charts and their earnings and sales growth. This company has been losing money since the first year they went public, since 2017, and losing a lot of money. And if you're comparing it to Amazon, they also don't have any sales growth. I mean, Amazon lost money as well the first 10 years or so, but at least they had sales growth. This company doesn't even have sales growth. So fundamentally, I think this company is a fad. Technically, obviously, last week we had a huge volume breakout. So in a hot market, it can continue to run. It can double, triple, quadruple. Anything that is a small float, anything can happen, as we saw with some of the Chinese and Hong Kong-based stocks in the past few weeks. But this is just a short-term play. It's not a long-term play.
And by the way, it's something the Amazon of Africa would assume that they have their own Jeff Bezos. And I didn't think there were many Jeff Bezos. So the odds that there is a Jeff Bezos of Africa, let's call him a doppelganger that happens to choose the exact same business as Jeff Bezos, seems low. So I'm always wary of don't get me wrong, we all were guilty of this for 10 years, but the Shopify of this or the Amazon of that.
Yeah.
Generally, Starbucks could be the next Starbucks. I try not to think of what company could be the next Starbucks, because generally it's Starbucks that becomes the next Starbucks. They fix something in their system. They've already got the distribution. They can do an acquisition. But I'm always wary of these foreign versions of everything.
All right, that's great, guys. Thank you.
It's a German-based company, by the way.
It's a what?
It's a German company. German-based company.
I've traded it before. During the fintech boom, I did dabble a little bit because, again, it was a fintech boom. I don't think we're in a fintech boom right now. In fact, we're in the opposite of that. So the odds of an African version of a fintech broken index starting to work in Africa is just another reason why I'd be wary. But God bless. I hope it quadruples. I'm not voting against it. I'm just saying that's how I look at it.
Shout out to all the folks on the Jumia stream. Yeah, they got a lovely community over there. All right, before we wrap up, let's just give the folks just quick stock tips for heading into next week. What looks really good to you guys as far as price action is concerned, and what people should be trading.
Well, I think I was looking. If I'm looking at a couple things this week, it's crack.
And sorry, just to interrupt, Ivan, if you want to throw up a chart, you can go ahead.
Yeah, I wanted to share. Yeah. Let me see.
I think crack. XBI, like the indexes that look interesting if risk stays on, and I don't trade stocks under 10, of the crack index, the XLV index, and the biotech XBI, some components of that. So there's still a risk on. Render is a token that I added some last week. There's a good video that I guess we can share. I got to get it to you, Tommy. and we can add it Airbnb for GPU. Kyle Samani, who my dog's about to bark, but Kyle Samani talks about render when it was back in the twos. It's breaking out to all-time highs here in the fives. And if we're thinking about what we talked about with the new ChatGPT product, what's it called that we were just talking about?
Sora.
If we're thinking about Sora, GPUs for video is interesting. So render you can buy on Coinbase. That's a high flyer that I don't like to recommend, but if people want to take a flyer and a token, render's interesting. I'll share the video with you when we hang up, and you can put it in the post.
My dad's going to appreciate this pick. Good one.
It's his retirement plan, right?
100%. Exactly. Yes.
He's 100% long render. Okay. I think for next week, as you said, considering the bearish seasonality, the typically bearish price action after monthly options expiration, I think I would, being short Microsoft is not a bad idea here for a pullback towards, maybe it's 50-day, maybe it's year-to-date view up, which is around 390. So, and you can probably use put options as well for that. That's
very contrarian. I love that. That's great.
Well, it's just an idea.
Yeah. Short-term pick, long-term obviously is still an uptrend. Short-term for the next week.
Well, all right, guys. That wraps us up for this week. Thank you so much for offering your thoughts and ideas with the people. And anything else before we wrap up?
No, thanks, Tommy.
Thank you.
Good to get the YouTube channel up and going. Ivan, thanks, buddy. Thanks, Tommy, for organizing this. Yep. What's been the take? I mean, this is week 2. What's the take so far? People are happy with that?
People like it. I think the community stuff is nice. It's people like hearing what your thoughts are on the markets, and having Ivan around to be the truth arbiter of what's happening as far as price action is really nice. So I think both of you guys do a great job.
Yeah, Ivan's the pro here. He keeps it simple. I think we have to ask the people when we ask the question of, we're good at what we're good at, which is talking about strength, and you're not going to hear us. I'm going to occasionally swing short, but not fundamental reasons, just when the market sets that up. So I don't want to give people, let's try and steer people to questions that really we can help them with.
Yeah, no, sounds good. All right, guys.
Great.
Thanks so much. Have a great week.
All right,
bye. Guys.
See you guys.